Hello A plus traders, welcome again to our YouTube channel. Today I'm going to share with you how to profit in Forex with fundamental analysis. As you all know, my name is Anibit Asa, the founder of A plus Trading Hub. So in today's lesson we are going to look at understanding fundamental analysis, the advantages of fundamental and technical analysis, the tool used in fundamental analysis, key fundamental indicators, and how you can conduct fundamental analysis like a pro. But before we go into deep details of this lesson, I want us to look at fundamental analysis, like what's its fundamental analysis. Fundamental analysis is a way of looking at the forex market by analyzing economic, social, political forces that may affect the supply and demand of an asset or currency. So using supply and demand as an indicator of where price could be headed is easy. The hard part is analyzing all the factors that affect supply and demand. So let's go down to understanding fundamental analysis. Understanding the reasons why and how certain events like an increase in the unemployment rate affects a country's economy and monetary policy, which ultimately affects the level of demand for its currency. The idea behind this type of analysis is that if a country's current or future economic outlook is good, their currency should strengthen. The better shape a country's economic is, the more foreign businesses and investors will invest in that country. So this also results in the need to purchase the country's currency to obtain those assets. So bottom line is, a good economy is equals to a higher currency value. A bad economy is equals to a lower currency value. Example, let's say the USD, that is US dollar, has been gaining strength because the US economy is improving. As the economy gets better, raising interest rates may be needed to control growth and also inflation. When there's too much cash, when there's too much liquidity in the market, like people are spending cash up and down, if it's not controlled with increasing interest rates, inflation will come in very, very big. Now let's look at the advantages of fundamental and technical analysis. We're just going to do a little bit of comparison here. So in fundamental analysis, we are looking at the market valuation, like if the market is undervalued or overvalued. It also gives a solid understanding of the market and the whole industry. It is geared at more longer term trades, like when you look at the big boys like George Soros, they look at the fundamental analysis to gauge long-term economic growth, because they are long-term investors. They are not just short-term traders, they are long-term investors. That is why they use this fundamental analysis to back up their trade buyers. So fundamental analysis needs an extensive research. Then technical analysis gives you more clue on your timing, your trade entry, the entries and your exit. It could be used on most trading instruments, like you can use it on any financial market assets. It favors shorter term trades like swing trading and day trading. It encompasses all current information, like all current price information are being presented on the chart for you to analyze. So that is the advantages of fundamental and technical analysis. You see how both of them works, and that is the little comparison there. So the best thing to do as a pro trader, as a good trader, is for you to balance the two of them together. Try to merge the two of them, like combine the two of them together, for you to have a better trade direction or analysis. Let's look at fundamental analysis tools. The very first is the economic calendar. This focuses on the release of major and minor economic data, financial news media, news on economic and geopolitical development, historical fundamental data, helps to determine fundamental trends. It also fundamental has a trend, so you can actually use the trend to project what will happen next in a fundamental event. For example, let's say an unemployment rate in CAD, like Canadian dollar. Let's say for the past 3 years it has been increasing. You can actually use that to gauge, okay, fine, this is the data shows unemployment rate has been increasing, so there are chances that it's still going to be on an increase. So it's that simple. So let me just show you quickly where you can get all this information you can use for your fundamental analysis. The number one place which I really like using is my FX book, and the second one is investing.com, the third Bloomberg, cnbc.com, and FX Street. All these websites, they have apps, so you can also download the apps on your Android device or on your iOS device and you use them. There are others like Forex Factory, which other one, FX Daily, Daily FX. There are many. So, but these are my major, these are the ones I focus on every time I want to do my fundamental analysis. So I basically use my FX book and investing to look at the economic calendar. Then CNBC and Bloomberg, I use them to look at the geopolitical news and economic development. Then FX Street too, I use it to get infos on geopolitical and economic news. Then inside my FX book and investing, that you can also find a fundamental historical data. So let me share with you key leading fundamental indicators. The number one key leading fundamental indicators is the employment report, the trade balance, the current account. These events I'm mentioning now, you can easily see them on the economic calendars on this website I just listed. You can see them there and you can follow them. The gross domestic product, consumer price index, producer price index, purchasing managers index, commodity prices, national credit quality. So these are key events. They are leading indicators for fundamental analysis. If the data here, the trade balance, for example, trade balance is increasing, that means that particular currency or country's currency is going to be on an increase too. Is going to get strength. Then interest rate decisions, which are mainly done by the central banks. The central bank basically increase and regulate this interest rate to make sure they control growth and they make sure inflation does not come in. Now, central bank rate statements, policy maker and central bank official speeches. Like, though this particular speech does not really have a key effect on a particular currency or country's economy, but you can pick up some information or clue on what is going to happen next when they are going to have an interest rate decision. So assets purchases and quantitative easing, election and power changes also affect a country's economy. Natural disasters, like right now we are having the pandemic COVID-19, is actually affecting most currencies and most countries and nations too. Wars, in times of war, nothing is always stable, everything goes south. So during wars, a particular country's economy can tank. So during wars, you can know, okay, like for example, which country is fighting every day. Okay, when there was a war in Vietnam, back then the region, the economy was very, very poor. So you can see when there is war in a particular country, the economy can never be blooming. The economy will be tanking. So let's look at how you can conduct fundamental analysis like a pro. So one, you need to keep an economic calendar close by. Make sure if you're a day trader, make sure you're always looking at the economic calendar, both the high impact events and the medium impact events. You can kind of ignore the low impact events, but make sure the high impact and the medium impact events, you actually pay attention to them. You stay informed on the key leading economic indicators, like that is by reading the news on the on Bloomberg or CNBC or FX Street. Know the market expectations and pay attention to whether the expectations are met. For example, let's say the central bank governor gives a speech and says, okay, we are going to increase interest rates by so percent. Now, once the data is released, you need to check if it was increased to that percentage. If it wasn't increased to that percentage, you know there may be changes in the market. Don't react too quickly to news. Often numbers are released and then revised. This happens a lot, especially during NFPs and interest rate decisions. So you have to pay keen attention to that. Then use news and data releases to initiate and liquidate short-term trades. So let's say you're a day trader and there is a news release. For example, let's say you were buying Euro USD and NFP is out and the number is increased, like the numbers changes from, let's say the previous was 234 and the new NFP rate comes in at 254. That means there is an increase. This shows that there is stability in the US economy, and this will affect your trade. So this may make Euro USD to start selling from anywhere in the price chart, in the chart. So when you get this kind of data release or information, you can take partials out of your trade, or maybe you can leave the trade, or maybe you can start trailing your stop loss. So you use the news and data releases to initiate and liquidate your short-term trades. That is what we are going to cover in this particular module of this lesson. The next tutorial, we are going to cover how to combine fundamental and technical analysis together, and we are going to actually do that on the chart. I'm going to do that on the chart, and you also see how you can actually trade the news too. So thank you for your time. If this video was helpful for you, like the video, and if you have any questions at all, comment below this video. I'm going to attend to them and maybe do more videos for you.